Hey guys, what's up? It's Frank here from Altcoin Buzz coming to you from sunny Bali, and today I'm going to give you 5 ways to determine if Bitcoin has bottomed, or for any market for that matter. We're going to have a look at Bitcoin's previous major bottoms and see if we can find out which of these indicators could have told us that we were going to bottom out at those times. Before we have a look at these 5 technical indicators which can signal a market bottom, I just want to point out that trying to catch the bottom is usually not a great strategy. It's often referred to as catching falling knives. And what that means is that the market is falling and you're trying to buy the bottom, but because it's falling, because it's trending downwards, you're essentially trying to catch a market reversal, which is a very tricky thing to do. And that is why the simplest strategy, especially if you don't have much time or you're not interested in trading, is to dollar cost average, all right? So you just buy $10 worth of Bitcoin every week. Even if you'd have done that since Bitcoin was at its peak, if you had started when it was about $20,000, you would still be in profit right now. Because as you can see, despite having been in a bear market for most of this time, Bitcoin was actually below $10,000 for most of this time, so you would actually be in profit right now. Okay, but that being said, let's now have a look at these indicators. If you enjoy this content and want to see more of it, don't forget to subscribe, like, and hit that notification button, as it really helps to support the channel. Before I get started, I just want to let you know that I am not a financial advisor and that trading and investing presents financial risks. So the first and arguably the most powerful indicator for Bitcoin bottoms is the 200 moving average. So by the way, for all these indicators which I'm telling you about, you just click indicators on tradingview.com over here and you type in the name of that indicator and then you pick the one that you want. So the indicator I'm using here is EMA/MA. This gives you exponential moving averages as well as moving averages. And I'm just going to show you the 200 weekly moving average over here. So remember I said that there were 3 major Bitcoin bottoms. That's this one over here, this one over here, and this whole area over here. So as you can see, 2 of these major Bitcoin bottoms were caught by this blue line. But what's really interesting to see is what happens if you extrapolate this blue line backwards. So this blue line is of course the 200 moving average, and that's why there wasn't enough data yet to create this line for these previous candles. But if I just get my handy blue marker over here and bring this back, you can see that it's quite likely that this would have come somewhere at the previous market bottom as well. So what that means is that this line is probably the most powerful signal of a market bottom for Bitcoin, the 200 moving average. Now, if we zoom in a bit here, you may be wondering, well, if it's such a powerful indicator, or if it marked the bottom, how come we crossed it by a large margin? It was actually at the sort of $5,500 level, and we came all the way down to $4,000 before going back up. And that's a valid question. Now, what often happens when you have these support lines is that you have a lot of stop losses which get triggered below this level, where people essentially think that it's going to be very bearish if we go below there. But very often what happens is this is all manipulation and the market just gets brought right back up. And in fact, when you have not only 1 but 2 large wicks pushing us back up above this line, and especially when you have a close above the major support line, as we did here on the 16th of March, it's a very bullish signal that you have a potential bottom in the market. So one way to mitigate buying at the bottom here and just hoping that it will be bullish is to wait till you get here and wait until there is a candle close, at least 1 or 2 candle closes above this level. If you had have done that, used that strategy in this instance on March 2020 this year, you would have bought Bitcoin either at this candle close at 5,820 or this candle close at 5,892, which would have been very good levels. And similarly over here, you could have waited for this candle to close. We were just above it. And this candle actually closed pretty much at the exact bottom at $3,301. So that's the first technical indicator, the 200 moving average. Now, as you can see, Bitcoin is currently at $10,000. It doesn't mean that we're going to come down to here. But what it does mean is that if we do approach this 200 moving average, it's going to be a very, very bullish place to buy. It's going to offer potentially very high risk to reward if it does come down to this level. Okay, now the second indicator which I'm going to show you, which is also a very bullish sign, especially for Bitcoin, and especially on the 1 week chart, all right, guys? So when we're talking about market bottoms, we're talking about sort of longer time frame bottoms, and also the higher time frame you use, the more relevant, the less noise there is in the market. So in other words, the 200 moving average will be much, much less relevant on a sort of 5-minute chart than it is on the 1 week chart. Because on the 1 week chart, there's a lot of swing traders, a lot of big players are looking at this, whereas the 5-minute chart, it's mostly day traders who are looking at that. So it's not nearly as relevant as on the higher time frames. So this second indicator is also very, very simple, and that is simply having a look at when Bitcoin was in the oversold level, or at the very least approaching close to this level. Now the oversold level is anywhere below this 30 line on the RSI. So I've drawn a box here. It doesn't have to be exactly 30. Of course, if it goes below, that's also potentially a good level to buy. But sometimes you will come just sort of close to that 30 and not quite hit it before making another big move up. But have a look at this box. Look at these 3 times that Bitcoin came down to this level, sort of the 30 zone. 1, 2, 3. Now let's have a look at the price to see how it corresponds. So have a look. Bottom, bottom, and if we zoom out a bit here, bottom as well, right? So that's no coincidence. This is a powerful indicator, especially on the larger time frames. It occurs rarely, but it is a very powerful indicator that Bitcoin has bottomed. Very, very similar to the 200 moving average. Now, admittedly, it's not always going to work wonderfully. You can see that in September 2014, the RSI actually approached our blue box and it reached a low of about 30 over here, but this over here was not the bottom. We actually had a new low. So the lesson here is that no single indicator is perfect. And what you really want to do is you want to find a combination of indicators which show you that it's the bottom. So for example, if you can see that you have a low in RSI and you've touched the 200-week moving average, then that's a good signal. You see the last 2 times this happened, this was a very strong buy signal. Now the next signal to watch out for is when there is increasing bullish volume, or in other words, where there's been little volume for a certain period of time and then you see a boost or a boom in green bullish volume. So this requires a bit more intuition, and let's have a look at some previous examples to see where we might have spotted this. So what you want to look at is a period where there is decreasing volume and then all of a sudden you see an increase in bullish volume. So this would be a good example where you can see the volume was decreasing. We had lower highs here in terms of the volume, and then bam, here on the 27th of April we had an increase in bullish volume, which was also on a very bullish candle. Not only a green candle, but you can see the low of this candle was close to the bottom of it and the high of the candle which was close to the top, which basically means this is a bullish candle. So what you're looking for is an increase in bullish volume on a bullish candle. So this would have been a confirmation that this was the bottom. Of course, you would have gotten pretty far from the actual bottom, but at least this is the confirmation that we're headed for another move up. And indeed, Bitcoin does look very bullish right now. We haven't yet broken the $10,000 level, and even if we get down to sort of the $9,000 level, we will still be in a bullish market. Now, if we take this example and try to look at the end of 2018, beginning of 2019, here it's a bit more complicated. So as you can see, we have this downwards trending volume, which we were talking about, and then we had this green volume bar, which is an increase in bullish volume. However, you have to be wary. You have to look at what the candle actually looks like. This candle doesn't look that great because although it's a green bar, the price actually went all the way up to the top of this bar, reaching a high of 4,282, but it closed, in other words, this week, the end of this week, the price closed at $3,831. So what it means is that this bar went from a low of 3,723, went all the way up to 4,282, but then it got pushed all the way back down again to 3,831. So that's not nearly as bullish as what you would want. So really, what you'd be waiting for is the next bar here, which was bullish. Again, you're looking for an increase in bullish volume, and you have it right here on this candle. And here, indeed, this candle was very bullish. There's actually a name for this candle. I think it's called a big money bar, where essentially you have a lot of buying pressure, you have a lot of volume, and you have the open close to the bottom of the candle and the high close to the top. So this is, again, a very bullish signal that we are entering a new bullish trend. So we've looked at the bottom of March 2020. We've looked at the bottom of December 2018. Let's see if we can extrapolate this to the previous bottom, which was here sort of everywhere between January 2015 and 2nd of November 2015. So again, you can see that we have a period of decreasing volume, and then really the only really bullish bar over here where we start seeing an increase in volume is this one, right? So we have this period, and then over here we see an increase in bullish volume. Now, unfortunately, this was not a very powerful indicator, and although we had a solid bar over here, a bullish bar, we actually saw new lower lows. So again, it just goes to show that none of these strategies, none of these technical indicators by themselves are super reliable, but if you can see them in combination, then they can be much more reliable. And it's also worthy to note that this isn't going to let you catch the exact bottom. This is usually a strategy which you use to confirm that we've bottomed. Now, the fourth strategy which you can use to see if we've bottomed, and again, the more of these that you see working together, or in other words, when you see a confluence of these factors, the more confidence that you have that we've actually bottomed. So the fourth one is a support resistance flip. Now this is a good example of it. Here we had resistance at this $4,287 level, and we found support over here in March 2020. And this of course led to a new move up. Now of course we did have a wick going below it, but pretty clearly around this zone we found support. And similarly, if we look at the December 2018 low, we can see that this corresponds quite closely to a previous resistance at the $3,000 level. Now, admittedly, again, we did not come quite down to this level, but again, the point is that you start to see multiple factors. In other words, you see oversold RSI, you see that we're at the 200 moving average, you see that we have this previous resistance, which is now turning into support. All of these factors in combination provide a very good reason to be buying into this market. Now, if we try to go to the previous bottom here, it's a little bit more complicated, but essentially what you can do is you can assume that the previous high, which really mattered, was the $175 level. Why? Because this marked the close of these candles. Then, of course, you have a very beautiful touch of support over here. So again, the support resistance flip is a very powerful indicator. So the last indicator which I'm going to show you has actually never happened on the weekly chart because it's a very rare indicator, especially on larger time frames, but you see this very often on lower time frames. So if we go down to the daily time frame, I will show you where we have seen it. So the last one is very simply a bullish divergence. So what this means is that we see a higher high on the RSI, but a lower low in price. So again, let's go back to this December sort of 2018 period where Bitcoin bottomed out, and let's see if we can find this divergence. So as you can see, we have the RSI going up for a higher high, but we have the price going down for a lower low. So as you can see, the price made a lower low while the RSI made a higher high. And this marked bullish divergence. So really, when the price was down at this $3,200 level, this marked an incredible opportunity to buy. Not only were we at the 200 weekly moving average, but we also had an oversold RSI on the weekly, and then we had this bullish divergence on the daily. So a very, very bullish sign. Now, one thing which is worthy to note, which actually complicates this a little bit further, but which is very important to notice, is that we actually had a bullish divergence when the price was at 3,400. So have a look at this. So you see the price made a lower low over here and the RSI made a higher high. So you might say, okay, well, that's a bullish divergence. That's reason enough to go long. But unfortunately, what often happens is that you get a second bullish divergence. So as you can see here, we had another lower low in price. If I zoom this out, you'll be able to see this more clearly. We had another lower low in price, and we had another higher high in RSI. So it might be discouraging to enter at this sort of 3,450 level, seeing this bullish divergence, seeing the whole range of indicators on the weekly time frame as well, and then to see it make a new lower low. You might even get stopped out of your position. But when you see a second bullish divergence here, and sometimes you even see a third bullish divergence, it actually gives you even more reason to enter. So the second or third time you see a bullish divergence, if they occur, are even more bullish entry signals, even more potential for a bottom and for a high risk to reward than if you just see one bullish divergence. So this was the end of 2018. Now the March low, of course, we did not see a bullish divergence, and this is what happens actually very often when you see a very drastic move down, is that you have a very heavily oversold RSI, but then it bounces back sort of so quickly that you don't even see a new lower low, and then you don't even get the opportunity to buy on a bullish divergence. So there you have it, guys. Those are the 5 indicators that you can use to determine if we are bottoming out. And again, the more that you can see in conjunction, the more likely it is that we really have bottomed out at that level. And just to summarize, number 1 is the 200-week moving average for the weekly chart for Bitcoin especially, which has corresponded to 2 and would likely have corresponded to 3 market bottoms if we could extrapolate this going back. The oversold RSI, if you get below the 30 level, this has only happened 2 times in Bitcoin's history. This has marked the absolute bottom. The increase in bullish volume after an extended period of decreasing volume, this doesn't mark the exact bottom, but it's more of a confirmation that we actually have hit the bottom. And then, of course, the support resistance flips, which 2 times marked the exact bottom over here and over here when Bitcoin hit about just over 3,000 and when it hit just sort of about $4,000. These both marked bottoms. And finally, of course, the bullish divergence, which if you see on the weekly chart would be incredibly powerful, but if you see on the daily chart, can just add to all the other potential indicators to suggest that Bitcoin is bottoming out. So with all that being said, it must be noted that it's very, very hard to catch the exact bottom or even very close to the bottom. One reason is that when the markets reach these bottoms, people are often in a psychological or an emotional state which prevents them from making the rational decision, prevents them from realizing that there is this massive opportunity because they've basically already been hit quite hard with the losses up until that point. So it's very important to stay level-headed, to be prepared for the worst-case scenarios. For example, if Bitcoin does come down to $6,000, this could provide a very good buying opportunity. And it's important to sort of not go all in at a certain level and to have your stop losses if you're trying to catch the bottom. Without proper risk management, there's no way that you're going to be a profitable trader or investor for that matter. For those of you who are interested in getting $50 for free, sign up for a debit card on crypto.com using our referral link down in the description below. You'll get $50 on the house. All you have to do is enter your email address and the referral code will already be in there. And by the way, guys, if you sign up for Binance, you will get $10 free just for trading $100 worth of cryptocurrency. Again, link in the description down below. Alright guys, I hope you learned something from this video. Let me know down in the comments below. Did you ever catch the Bitcoin bottom? Did you get close? What prevented you from buying at the bottom? Let me know down in the comments below. Alright guys.